Before we get started with our tutorial on how to use this product, I want to give you some background on why we developed this. We started in 2007. Some of our picks went up over 1,000%. Most of our picks went up somewhere between 20 and 30% the first day. And then we found one little trick that worked 90% of the time to pick the penny stock that will go up. We decided right then and there this was the only thing we wanted to show investors and put all of our focus in developing the best product for you, the investor, to win playing penny stocks. We guarantee that you will love this program. If you're unsatisfied for any reason at all, just tell us and we'll give you your money back.
Okay, enough of this. Show me how to make money with this thing.
Fine. I'll show you how to log in before the open and find a stock that you'll be able to buy and sell for a 15-minute trade. If you do this right, you can come out with a nice profit before 10 a.m. in the morning and be completely done for the day. This is the only way we think that you can make money playing promotions. And to get this right, you're going to need to follow our instructions exactly. If you try and hold these stocks, even for a day, you will lose. This system only works on small dollar amounts. Quick trades where you can make a few $100s in the morning. If you're looking to invest over $2,000 per stock, we do not recommend this strategy. For bigger trades, use Hotstocked Precision. Okay, so penny stocks. We regularly warn investors about bad promotions. And if you look at our channel on YouTube, and everything there is recorded by date, so you know exactly when we said it. You will see that 98% of the stocks we warned investors about failed miserably.
Well, if all of these stocks are going to fail, why should I buy them?
When hundreds of thousands of emails go out on a stock that hardly ever trades, a certain percent of people will buy the stock, and this can move the price up. This move may only last for a few minutes, but that's where you can make the profit. There's just a few things that you need to look for to know if the promotion's going to work. Most important, is this a fresh promotion?
But why is this important?
Great question. There's two reasons. Reason number one, when a mailing goes out with a sweet story about some penny stock that will go through the roof, some investors and traders will buy. But when the same promoter keeps mailing and telling the story over and over and over again, it has almost no effect. So the first mailing is always the best. Reason number two, the other problem with stocks that have been mailed heavily is that when the first mailing goes out, the main person selling is the guy who paid for the promotion. On day number two, you have all of the people that bought on day number one who may also sell. And of course, the guy who paid for the promotion is going to keep dumping, so it can easily turn into chaos. Your risk goes way up.
Okay, I got it. So how do I find out if the promotion is fresh?
If it's on the main screen, just click on the symbol, and you can see in our database when was the last time it was promoted. If it's not on the main screen, click on the search button. Enter the symbol or company name, and you'll get the company's complete history. We like it best when the stock was never mailed at all, but these are rare. Rule number one, it's best when there haven't been any promotions in at least 1 month. Now let's talk about rule number two. Only buy companies at cheap prices.
Oh, I already know how to do that. I just buy the ones that are lowest in price.
That's what a lot of people think. But a low price per share doesn't mean that the stock is cheap. Cheap stocks are companies with low market caps.
What are you talking about? Do you mean to tell me that a stock can be expensive even if it only sells for 2 cents?
Yes, a stock can be way overpriced, even at a penny. The market cap is the real price. That is what you would need to pay if you wanted to buy the whole company.
Why are you telling me this? I don't want to buy the whole company. I just want a stock that will go up.
There's two reasons this is important. Reason number one, supply and demand. The guys that are paying to pump a stock usually end up getting somewhere around 10% of the company. This is what they're going to be dumping.
Oh, I understand. Pump and dump.
Exactly. So if the market cap is $30 million, they should have somewhere around 10% of the stock they are ready to dump. $3 million worth of shares. That's the supply. If there isn't $3 million worth of demand, the price goes down. It's that simple.
Oh, now I understand. This isn't so hard after all. Is this how you knew which stocks were going down?
Yes, exactly. We were right 98% of the time in our videos when we said which stocks are too high. We knew this from the market cap. It isn't rocket science here. High market caps means the supply will be tremendous. And there's another reason. Reason number 2. Companies with high market caps cannot raise capital. Only companies with low market caps are attractive to professional investors.
Why do you focus so much on numbers? I like companies with great stories.
We all love to hope and dream about a good story. But these companies are going to need money to make their dreams come true. And the guys who finance small companies are going to want to commit the minimum amount of capital and get a high % ownership in the business.
Oh, I get it. Professional investors want to get a lot of stock for a little bit of money.
Exactly. Here's a good rule of thumb. It takes a minimum of 1 million to have a chance at building a successful public company. The investor who plunks down $1 million or more is going to want somewhere between 15 and 50% of the company.
Now I'm confused again.
I'll simplify it. If $1 million buys you 15% of the company, the whole company would be selling for $7 million. If $1 million buys you 50% of a company, the whole company would need to be selling for $2 million. So for it to be attractive for a $1 million investment, the market cap should be somewhere between $2 and $7 million.
But the company that I research is going into cloud computing. This is $1 billion industry. Surely a professional would spot the opportunity and finance the company.
Never happens. If the market cap is 50 million, no professional investor is going to take a $1 million risk for 2% of the company. No matter what the story is, it's just not going to happen. So, in short, low market caps means less dumping and the company has better chances.
Now I see why this is important. How do I use Penny Stock Monitor to find the market cap?
Easy. Just click on the symbol and you will see the market cap right here. We like to see companies with market caps of around 5 million, but these are a little rare, so you may need to go a little higher. Rule number 2 is do not buy any promotions with market caps over $15 million. Okay, so we're ready for rule number 3. Only buy when the promoter is hot. There's an old saying on Wall Street. You're only as good as your last few stock picks. It was true then, and it's still true today. When a promoter's last few picks went down, no matter what he did last year or last month, his list of investors will be feeling like these guys over here.
OTC stock sucks!
Lord have mercy, I will not invest in this stock.
It's a pump scheme, I say.
When a promoter's last few picks went up, the greed kicks in, and his list of investors start feeling the love. When he mails a fresh new pick,
So, if his last 3 picks shot way up, does this mean people are likely to buy his next one?
yes, they will be much more open to his suggestion when he's on a hot streak.
That makes sense. Can I use your software to get that information?
Absolutely. We have the entire history of every stock promoter's performance.
Cool, show me where to find it.
Just click on the promoter's name wherever it shows up. And do you see here these 2 columns?
Yes.
Okay, column 1 is the maximum you would have made if you sold in the morning doing a 15-minute trade. Column 2 is how much profit his list could have made if they held until the close. Both of those numbers should be positive on his last few picks, and the higher, the better. If these numbers are in red, avoid this guy. He burnt his list.
Too much dump and not enough pump?
Exactly. And only a fool would want to buy his next pick. Okay, so rule number 3. Only buy from promoters that are on a winning streak.
I am excited to log in tomorrow and find the next good pump. Are there any more things I should know?
Yes, there is. And this one's important. Rule number 4. Watch out for the third party.
Yes, you're always talking about third parties. What is this anyway?
He's the guy who paid the promoter. You want to check out his history.
How do I do that?
Easy. Just click on his name wherever you see it. Or look him up in the search tab.
Every stock this guy was involved in was a disaster.
When third parties are too greedy, they try to dump all their stock as fast as possible. It's a pattern that you can see in all of their pumps. Take a look at this third party over here. Okay, it's still pump and dump, but he doesn't have a history of selling so much as to destroy the stock on the first day.
So he's a good third party?
I wouldn't say any of these guys are good. They're all bad. It's all pump and dump. But he's a guy that you have a much better chance of making money with for a quick 15-minute trade. Rule number 4, don't buy a promotion if the third party has a bad track record. Last rule, avoid stocks with bad charts.
How do I know if it's a bad chart?
The one thing that you really want to avoid is if the stock has shot up a few 100% in the days prior to the promotion.
But isn't it good when a stock is going up?
In most cases, it's a positive sign. But when you're dealing with the stock promotion, it is the worst possible sign. Because of course, the guy who paid for the promotion is planning to dump. Then you have all of the people who already own watching it go up. The second that stock reverses, they will all be dumping like it is the 4th of July.
Show me an example of a good-looking chart.
This would be a healthy chart for a promotion. The stock has been relatively quiet with modest volume, trading in a flat range. This would be an example of a recipe for disaster. The stock has already ran up 100% or more in the days preceding the promotion. Rule number 5. Look at the chart and don't buy stocks that just ran up over 100%. So here's a quick review of the 5 rules.
Rule number 1. Fresh promotions only. Double check to make sure the stock was not promoted in the last 30 days.
Rule number 2. Low market caps have a much better chance at making money. Don't buy promotions with market caps bigger than $15 million.
Rule number 3. Make sure the promoter is on the hot streak.
Rule number 4. Watch out for the third party. Make sure he doesn't have a history of burning everybody.
Rule number 5. Look at the chart. Don't buy anything that just ran up 100% or more.
Once you find a stock that meets all of these 5 rules, here's how you play it. Buy it as soon as the market opens and sell it within 15 minutes.
But what if it's going up? Shouldn't I hold it?
No, just get in, make your money, and get out.
I get it. 15-minute trades in the morning. I'm not going to hold these pump schemes.
Yes. So now you know the smart way to play pumps and how to use Penny Stock Monitor to find 15-minute trades. One last thing. Use the feedback form to contact us. We love to hear that our users are making money. Tell us about your profits, or tell us anything at all. We want to hear from you. And now, go make some money.